Hello there, warm welcome to you. I'm Angeline Ong, and this is the IG Live special covering the Bank of England rate decision in just a few minutes' time. Just to let you know, we've got a special guest with us, Nick Cawley, senior strategist at Daily FX, which is part of IG Group. Nick, thank you so much for joining us. We could be about to see rates rise to a fresh 15-year high. What are you looking out for?
Yeah, thank you. I think we are going to see a rate rise today. 25 basis points is the market forecast. So there's a 60-40 chance of a 25 basis point rate hike, which will take us to 5.25. As you said, the highest level in around 15 years. But I think what's most important today is what actually the Bank of England, Governor Beattie says, and the MPC say. You know, are they expecting inflation to start moving down even more? I mean, it has been moving down, but really quite slowly and from a very elevated level. And what are their thoughts on growth as well? You know, is growth going to pick up? The IMF obviously gave the UK a boost recently. You know, are we going to see that coming through in the next few months?
Now, as you rightly say, Nick, the inflation rate has been coming down, but it's stubbornly still not coming down as fast as many had thought. There are some market watchers that have said that the Bank of England perhaps might have to continue tweaking rates higher to effectively get unemployment to do their job for them. Is this your view?
I think we're at a very nuanced point here. We did have one stage about 2 months ago. We had the market forecaster saying that the Bank of England terminal rate will be around 6.25%. We're now at 5%. And now that's been downgraded to around 5.75%. I think if you look at headline inflation, we are going to get a reduction at the next figure. The Ofgem price cap on energies down from £2,500 to just over £2,000. So that's money off your bill. So that's going to bring inflation down. Yeah, and so I do think that we are seeing inflation come down, but it really is, it's the bank's decision. Is it coming down quick enough, and is it sustainable?
That's interesting stuff. There's also the argument or the talk out there that perhaps there has to be pressure on banks to deliver these rate hikes, you know, so that we encourage savers to effectively take money out of the market and therefore reduce spending and save, because this has sort of fallen by the wayside, hasn't it, after COVID?
Indeed, and I think another thing is as well, I think people, and it's a big topic at the moment, UK house prices, mortgage rates. If you have mortgage resets early next year, you're going to be paying substantially more on your mortgage than you have been. And this will cut sort of household consumption, which again will start to bring inflation down. We'll put downward pressure on inflation.
Now, the other thing that we're looking out for is perhaps, other than energy prices, perhaps the resumption of further support in terms of more projects to create more jobs. However, the UK labour market seems rather resilient. Do you think this might mean that the Bank of England might tweak higher for longer?
I think the labour market is very important, and it will have a great deal to say in the bank's forecasts. But I do think now, I mean, headline is inflation everywhere, and I think it really is first and foremost inflation. Let's try and get inflation down, and then just take it from there.
How about food? It's one of the biggest drivers of inflation. As we all know, a lot of the food in the UK is imported. So there's little the bank can do to bring the pace of food prices down. It has come down slightly, but they're still a lot higher. Do you think this will prevent the bank from perhaps acting or easing rather?
It's something they'll have to factor in, yes. I mean, obviously all the situation we have in Ukraine as well. And with grains and stuff, yeah, it is something that they will have to factor in. But I think, as you said, it's the things that they can control that we'll be looking at.
The UK Prime Minister, Rishi Sunak, has pledged, when inflation was above 10%, to halve price growth by the end of this year. I mean, if we look at June's reading, still high at about almost 8%. There's still some way to go. Is this just hot air?
I don't think there's a great deal else he can say, to be honest with you. I mean, if he starts coming out, especially in a year when we've probably got it elections next year and stuff like that, if he starts saying, oh, you know, sorry, we're stuck with this, I mean, he's not going to be around for too long. Ooh, we just had something here.
Exactly. It's just as expected. We've got the Bank of England hiking rates to 5.25% from 5%. Also, this will be the fresh 15-year high for UK interest rates. The last time rates were at this level was April 2008. Nick, what's the reaction like?
Well, you saw a quick spike down on the one minute chart here. You saw a quick spike down to around the 126.30. But what you see around when these interest rate decisions come out, unless there's a big outlier out there somewhere, you'll see a reaction, and then the reaction is normally bought back. And as you can see here, so we're really only about 10 ticks away from where we were.
Yes, and also interestingly, 8 out of 8. That was the vote. And quite close to what you were expecting.
Well, we got so we had
8.
So seven for a hike, 2 for unchanged. Okay.
And the actual was 8 for a hike and 1 for.
Yeah. So that's obviously, as I said, Silvana Tenreiro, who was one of the doves, has left, replaced by Megan Green, who's obviously gone along with the majority there.
Right, so that's our latest for the Bank of England rate show with Nick Cawley from Daily FX. Do tune in for more reaction on @IGCom and on Twitter and @Angeline Ong. For the very latest, we'll give you more analysis as we get it.